Hello everyone. This is the market report video for today, 1st March 2024 for the Indian stock market in terms of Nifty and Bank Nifty. First of all, about yesterday's Indian market, the price action was influenced by two main factors. One, yesterday was the monthly expiry for both Nifty and Bank Nifty, which itself created some volatility. In addition, market at that time was waiting for this two major macros, Indian GDP data and PCE inflation, which we will discuss in detail in the later part of the video. So, expecting both these macro data release, which created some profit booking as the short covering. Hence, if we see the Nifty's price action, it was very volatile but within a small range. One more thing, apologize. In the last pre-market video, I mentioned Bank Nifty's monthly expiry was on last Wednesday, but it's not. It's yesterday only. However, just for info, from this March month onwards, it will expire on Wednesday itself. Anyway, back to the market. The volatility was small because most of that was observed by the MSCI rebalancing. I mean, as per this SEBI and NSE guidelines, whenever this kind of index rebalancing, that entity has to control the volatility that associated with rebalancing. Here, if we see the FII data, we can see it clearly. On a regular day, their net trade value both on buy side and sell side will be around just 12 to 15,000 crore rupees. But for yesterday, it was in the range of 50 to 55,000 crore rupees. Near 4 times than that of the regular buy and sale value. I mean, always the additional fund into the market will always be below 10,000 crore rupees. Hence, the purpose of this extra trade value money is just to control the rebalancing induced volatility. Again, because of this rebalancing, FII turned as net buyers. They net bought for 3,570 crore rupees, whereas DII net sold for 230 crore rupees. So that's the important takeaway from yesterday's market. In future, whenever there is a rebalancing, either FTSE or MSCI or even Nifty, on that particular day, to some extent, we can expect the volatility will be controlled. Then coming to US, last night before their market opening, Department of Commerce released the widely expected PC inflation data. If required, please pause and have a look. Almost all of them, both in month-on-month basis and year-on-year basis, all of them comes in line with the analyst expectation. Here, core PC inflation is more important. As you see, on year-on-year basis, it increased 2.8%. There is no surprise. It was the lowest value in the last 30 months. However, on the slightly negative side, on a monthly basis, it increased 0.4%. Though it was also in line with the expectation, but still 0.4% increase compared to December month was the very huge value. For those who don't know, if we remove food and fuel volatility in the overall inflation, then that is core inflation. Anyway, as a whole, the data is okay. It is what the market expected to be, and because of this good data, all US major index opened positive. However, Dow Jones positivity was trimmed by pressure in the Boeing stock as US DOJ begins the door blowout incident. Thus, in the end, Dow Jones increased by 0.12%, S&P 500 increased 0.52% and Nasdaq up by 0.09%. Here, there are some additional positivity in semiconductor stocks which helped the Nasdaq. In case of US VIX, still now again it's back below 13.5. This inline OK PC inflation data puts pressure on the US dollar. Hence, it reduced the 10-year bond yield from over 4.32% to 4.25%. About oil, it haven't changed much. At the time of this video, Brent crude trading around $82 per barrel and WTI crude trading at $78 per barrel. Coming to Indian ADR, all 4 major Indian stocks closed positive. However, here I like to highlight a couple of things. In Indian market, HDFC Bank closed negative, but in US, it closed positive of over 0.5%. Then for ICICI Bank positive close, it's a straightforward. We can understand that yesterday as per SEBI filing, again ICICI Bank increased their shareholding in ICICI Lombard Insurance by 0.4%. Hence, their total shareholding on the stock exceeds the 50%. Thus, now ICICI Lombard Insurance has become a direct subsidiary of ICICI Bank. About Gift Nifty, today early morning it closed at 22,165. As we know, yesterday was February month expiry, so the next will be on March month 1. So at present, I am expecting a premium of 110 to 130 points. By subtracting that, we can say now it's indicating a gap up opening of 20 to 50 points. One more thing, yesterday in the aftermarket hours, Indian Ministry of Statistics released the December quarter GDP data. Here, analysts, even the Indian government chief economist, all expected the economy to increase 6.6%, but as a surprise, it increased by 8.4%, which is a huge positive, so we can expect the market to react for this as well. However, yesterday, US FDA released some observation to improve in some pharma companies' facilities such as Aurobindo Pharma and Biocon, etc. So, I expect those stocks will be focused negatively. As a summary, both GDP data and PC inflation data comes in favor of market, and Nasdaq closed near 1% positive, and in line with that, both Indian ADR and Gift Nifty indicating a gap up. Let's see. Moving on, as per stock open interest, Apollo Hospital Enterprise, Z Entertainment Enterprise, Voltas, Aker Motors and MRF got an increase in open interest along with a negative close, indicates the short build-up. On the other hand, Dalmia Bharat, Berger Paints, Hindustan Copper, Petronet LNG, Axis Bank, Nestle, Cipla, Biocon and Kotak Mahindra Bank got an increase in open interest with a positive price close, indicating the long build-up. About the things to look out, early morning, Japanese unemployment rate is due to release. Then during our market time at 10:30 am, India's manufacturing PMI data, and at 2:30 pm, Eurozone PMI data. And in the aftermarket hours, Europe's consumer inflation data are scheduled to release. For US, their PMI data are some of the items we need to keep an eye out today. Coming to technical, Nifty opened flat and consolidated with mild volatility, 0.3% up and 0.3% down for most part of the day. And finally, it closed above 22,000 mark. But the post-market correction pushed it down below 22,000 mark. Thus, on the daily chart, it formed a bullish candlestick pattern with long upper and lower shadows, which resembles high wave kind of pattern, signaling ongoing high volatility at the lower side. On the daily chart, we can see three things. 1. Nifty defended not only 21-day exponential moving average 21,950, but also it moved above upward sloping support trend line, which suggests a resumption of its primary uptrend. Second, formation of such pattern after few sessions of decline indicates the possible comeback of buyers. And finally, the positive chart pattern like higher tops and bottoms remained intact on the daily chart, and currently Nifty is in the process of forming new higher bottom of the sequence. However, to call this market action as a short-term higher bottom reversal pattern, it requires further confirmation by a sustainable upside bounce in the upcoming sessions. Since at present, the daily and hourly momentum indicator is having a divergent signals, hence probably it might be volatile going ahead. At the lower end, crucial support is at 21,950, and as long as Nifty maintains above 21,950, there is a high probability of recovery. However, a decline below 21,950 could potentially lead the index towards 21,800. While on the higher side, the immediate resistance is around 22,200 to 22,300 level. In case of Bank Nifty, it was also volatile, but on the positive side, it closed above 46,000 after more than 1% correction on Wednesday. Thus, on the daily chart, similar to Nifty, it also formed a bullish candlestick pattern with upper and lower shadows. At present, on the higher, the immediate resistance is at 46,500, and a decisive breach above this level might trigger the additional short covering, which potentially pushing the Bank Nifty towards the 47,000 mark. Regarding the March month options open interest data, the maximum call option open interest was at 22,000 strike, followed by 22,100 and 22,200 strike, with meaningful new call option writing at 22,000, then 21,900 strike. Whereas on the put side, the maximum open interest was at 22,000 strike, followed by 21,900 and 21,500 strike, with new put option writing at 22,000 strike, then 21,900 strike. Thus, the options data indicates that 22,000 is expected to be crucial for further direction in the Nifty, with immediate support at 21,900 and resistance at 22,900. Thus, the options data indicates that 22,000 is expected to be crucial for further direction in the Nifty, with immediate support at 21,900 and resistance at 22,100 to 22,200 level. So that's all in this video. Hope you all got some useful information. Please consider subscribing the channel and liking the video, so it will help me beat the YouTube algorithm and also motivate me to do more. Please don't make any investment decision based on this, as I am not a SEBI registered advisor. I am doing this for me and viewers' educational purpose only. Thanks for watching.